Good morning all, and welcome to SThree's Q3 trading update for the period 1st June 2020 to the 31st of August 2020. I'm joined with Alex Smith, and we'll talk about our performance in the period. We'll also give you an update on the sentiments that we're seeing from our customers. But without further ado, why don't we get started? An overview of Q3. We had a resilient performance and a performance ahead of our initial management expectations. But I think it's worth bearing in mind to go back to where we are in the current environment. And at the bottom there, you'll see the three phases that we shared with you over our last trading update, and to give you an idea of how we see the pandemic play out. There was the initial response. We're now in a current phase called ongoing management with high levels of volatility. And ultimately, when we get a solution to the underlying health conditions, we'll go into the recovery phase and the next normal, whatever that is. But what we're seeing as we work hard as a business to operate in the current environment is that we're improving underlying sequential performance and continual resilience in the current phase. We remain focused on how to work best through this unpredictable and volatile situation. And I'm pleased to say that all aspects of the business continue to adapt well and improve performance sequentially. Our strategy is still absolutely the right strategy, and we'll talk a bit about that later. And therefore, we're making targeted investments and accelerating our strategic initiatives as all of the secular trends that we are at the center of are being accelerated by the current pandemic. But more about that later. And so now I'll hand off to Alex to go through our Q3 performance. Alex?
Thank you, Mark, and good morning. Group net fees in Q3 were down 14% year on year, compared to down 12% in the second quarter. And as Mark said, that was ahead of management's expectations as we came into the quarter. Contract, which represents 77% of net fees, was resilient in the quarter. Contract net fees down 12% in Q3 compared to down 11% in Q2. And our contractor order book sequentially stable. And that's a function of new sales activities, which were down 20% in Q3 compared to down 38% in Q2. A strong sequential improvement Q3 on Q2 of 26%, and an improved contractor retention rate up 1.7 percentage points year on year. And that resulted in the contractor order book being stable sequentially, down 15% year on year at the end of the quarter. And we ended the quarter with a strong net cash position of £39 million. Moving on to our regional performance, starting with DAC. DAC performed resiliently in the quarter, down 9% compared to down 9% in Q2. And the particular call out there being life sciences, where that business had a resilient performance, up 1%, driven by quality assurance and clinical research and development roles in particular. EMEA, excluding DAC, was down 22% in the quarter compared to down 17% in Q2. Largely reflecting more challenging performances in the UK, down 28% year on year compared to down 19% in Q2. The Netherlands had a robust performance, down 13% in the quarter compared to down 12% in Q2. And the contractor order book in the Netherlands was sequentially stable. The US was a particularly resilient performance, really the highlight performance in the quarter, driven by life sciences up 15% year on year in the quarter. That compares to up 13% in H1, driven by clinical operations roles, product development and quality assurance specialisms. And the US achieved not only sequential growth in the contractor order book, up 5%, but year-on-year growth too, up 2% at the end of the quarter. APAC Japan, within the APAC region, is a predominantly permanent business, and that continued to be impacted by the pandemic. We also announced our intention to cease trading and operations in Australia last week. And this is in line with our strategy to focus on the best STEM markets in which SThree has the best opportunity to take market share. Australia in 2019 represented approximately 2% of revenue and 1% of net fees for the group. So a combination of the improved underlying performance and balance sheet strength is allowing a number of positive steps. So just to recap, in terms of the improving underlying performance, that's in terms of the sales activity we've seen improving sequentially, and the decline year on year reducing Q3 versus Q2. Higher contractor retention rates, up 1.7 percentage points year on year in the quarter, leading to that stabilization of the contractor book. And the balance sheet strength means that we've welcomed back staff from furlough in the quarter. We've announced our intention to repay furlough support to the UK government, circa 600k. We've repaid the revolving credit facility that we drew down at the start of the pandemic, which we didn't utilise but held on our balance sheet. And we have resumed a share buyback programme to fund our employee benefits trust, which we suspended at the start of the pandemic. Finally, we continue to recognise the importance of dividends to our shareholders and are keeping future dividend payments under active review. Mark.
Thank you, Alex. And so you can see there that we are at a resilient Q3 performance, and which gives us the opportunity to position ourselves for the future. We have a strong financial position and the liquidity to see us through the period ahead and beyond. And as a result of the pandemic, we're seeing acceleration of the trends that we talked with you about at the Capital Markets Day. So in combination, that allows us to push ahead with the implementation of our strategy with a view towards achieving our long-term ambitions while continuing to perform well within the current environment. We also continue amounts of time with our candidates and customers and are actively engaging with them to get a sense of the sentiment in the marketplace, what future trends look like, and how our customers view the current environment and where they're focused and positioning for the future. You will recall from our Q2 and half-year trading update that we shared with you 3 emerging themes that we saw coming from our customers, and those broad 3 themes remain the same, but our customers' priorities are shifting from one of focusing on stabilization to that of business growth and innovation as they look to the future. These 3 trends, just as a reminder, were management of a more flexible and resilient workforce, rebuilding of global supply chains with a focus on resilience, and perhaps slightly obvious, acceleration of digital transformation. Those 3 trends remain the same, but the focus has shifted slightly. On finding a resilient workforce, the importance and difficulty of finding the right people has come to the fore as companies look to build opportunities and grow in the future. Focus on planning for the future and embracing innovative technology solutions to solve global supply chain challenges are now the focus as companies shift from stability into growth, and the focus on specific talent to help accelerate digital transformation is key, specifically in AI and machine learning, data science, and engaging with customers through new e-customer channels. Also within our sentiment survey, we've seen encouraging indicators from our clients. Almost 80% say they're actively hiring in some way to get that critical talent to support their growth ambitions for the future. 42%, just over 40%, say that hiring levels are coming back to normal, pre-COVID levels. 26% say that demand in their markets over the past 3 months have increased. And encouragingly, 9% increase in job postings is what we are seeing in the marketplace in July versus May. And all this is highlighted by over 50% of our customers and clients saying that their number one focus is finding the right talent is a challenge, and the need for companies like SThree remains critical. So in conclusion, our purpose of bringing skilled people together to build a future has never seemed more relevant, and we still sit at the center of two long-term secular trends: the need for critical STEM talent and the move towards more flexible working. It's clear that this strategy and our focus on STEM and flexible working has again served us well in this quarter, and we're pleased that we have recorded a resilient performance thanks to disciplined and well-planned execution and the incredible hard work of our teams. Looking further ahead, we continue to make targeted investments and are pushing forwards with our strategic initiatives to drive the group forward towards its long-term ambitions, building on this resilient performance and our ability to do so. Thank you all for joining us on our Q3 update, and we'll look forward to updating you at the time of year for our next trading update, which is on the 14th of December. So thanks all for joining, and we'll see you all in December.